the leverage in the gold market was 92 to 1. Perhaps 90% of the gold that the investment world thinks it owns doesn't exist.
Please join us for our next live stream Sunday, February the 21st at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, February the 21st, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As always, if you are new to our channel or if you haven't already done so, please do subscribe. Hit the bell to be notified on new updates and give us a thumbs up. If you like what we do, we truly do appreciate your support. Today's guest, Chris Powell. Chris is the Secretary and Treasurer of the Gold Antitrust Action Committee, also known as GATA, which he co-founded back in 1999 to expose the rigging of the gold market by Western central banks and their investment bank agents. And we're delighted to have Chris again as a return guest. It's time to saddle up and silver up for Chris Powell. Chris, welcome back to SBTV. How are you doing?
I'm great, and it's great to be with you, Pat.
Thanks for coming back on again, Chris. We appreciate the time as always. You know, Chris, we saw recently how the GameStop stock soared more than 1,600% just last month, reaching as high as $347. And analysts, however, they valued the stock at just 13. And it kind of showed that whoever has the bigger influence can move asset prices higher or lower than their actual value. Do you see this development as an example of market manipulation, regardless if it's long or short, and that the system, it just allows for manipulation to take place legally?
Well, I see the GameStop business as an illustration of what happens when really an excessive illegal short position is exposed. There were more shares of GameStop sold than there were shares in the company. It was a short position that was impossible to cover, and when people discovered it, they pressed it. There was really no value to the underlying company, but the people who had oversold the shares were pressured and had to buy them back. I imagine the margin clerks were knocking on their doors saying, we can't extend you infinite credit on this. So if there was, I think there was something like 100 million shares of GameStop issued, and there were 140 million shares sold short, the price can go to the moon for a useless, unprofitable company in circumstances like that. I mean, the manipulation, the original manipulation, I think, was not so much the people who were buying it up and pressing the short position. The original manipulation there was selling more shares short than there were shares in the company. And of course, the regulatory agencies did nothing about it. That's really a criminally destructive act, but it was allowed by the regulators in the United States. So you can make fun of the Reddit kids who jumped on this and exploited it, but the original manipulation was selling the company short beyond the number of shares that were actually issued.
You know, the euphoria from the GameStop story did spill over into the silver market when suggestions to force a silver squeeze in the market was put forth to retail investors, since this was a market where banks notoriously short silver. Chris, what were your thoughts when the excitement regarding a silver squeeze raged on social media, and did you think it was a movement that could gain any traction?
Well, I was delighted by it because I think for the first time in history, I got an email from a reporter at the Financial Times asking me for comment on the attempt to squeeze silver. Of course, they waited about 4 or 5 days before they used any of it, and then they cut out the part that I thought was most telling. But I told them that if the Reddit people thought that silver was too shorted and it was undervalued, of course I agreed with them. And if they thought that they could beat governments and central banks that were behind the shorting of silver as easily as they defeated a hedge fund or two. I wish them luck. And of course, they did not do that. Of course, a hedge fund may have a few $billion to defend its positions in the market, but the governments and central banks have infinite money to defend their positions in the markets. And the ordinary retail investors are not going to defeat governments and central banks in the market that way, especially if they were buying, as I think many of them were, the traditional exchange traded fund in silver, SLV, which is almost certainly entirely a paper product, which doesn't have any silver, and for ordinary retail investors is not convertible into metal. Anybody who wants to challenge the short position in silver has got to be buying real metal and taking it out of the market. And if the Reddit people were playing with SLV, they might as well just flush their money down the toilet.
Yeah, that's a great point, Chris. But when banks target gold and silver, really, what are their motivations or even fears to suppress the prices of precious metals?
Well, because the metals are competitive currencies. They are potential new world reserve currencies, returning from history where they were the reserve currencies. They compete with government currencies, and they are determinants of government currency values, determinants of interest rates, determinants of government bond prices. The literature on this, the government documents confirming it, are posted at GATA's internet site. There's really dozens of them. Gold and silver are independent forms of money, potentially independent, that challenge central bank control of money. Central banks don't want to allow that. They don't want the world to have an independent form of money. That money would wreak havoc on government currencies, because government currencies have been so overinflated. Their supply has been just increased so much in the last year. Market prices for gold and silver would really damage government currencies. So governments cannot permit free markets in the monetary metals.
Yeah, Chris, when you say competitive currency wreaking havoc, I think of Bitcoin. But why have we not seen the same level of suppression in Bitcoin, which has been also touted to be an alternative currency?
Well, we don't seem to be seeing it right now. However, a few years ago, a former regulator, former chairman of the U.S. Commodity Futures Trading Commission, admitted in a public address that the U.S. government had encouraged the formation of a futures market in Bitcoin precisely to pierce what the government thought was a bubble in Bitcoin at a much lower level. Why is Bitcoin getting out of hand right now? I think, well, there's two reasons. I imagine that investors understand that government currencies are being debased rapidly, but they may have a sense that government will not let gold and silver get out of the box. So gold and silver may be foreclosed to them as inflation hedges, but they're not so convinced that government can control the Bitcoin price. So they flow into Bitcoin because they think it is, less suppressed than gold and silver. There's also some thought on our side of the fence that the governments are letting Bitcoin fly like this precisely to drain interest and demand away from gold and silver, that they feel much more threatened by gold and silver, which after all are tangible assets that you can hold, and they're less scared of Bitcoin because they figure they can more easily control Bitcoin by either pulling the plug on the internet or prohibiting banks from processing Bitcoin transactions. That latter option is being discussed among central banks right now. So I would caution Bitcoin investors that Bitcoin is not the free ride, the free market necessarily that you think it is. If your bank will not process Bitcoin transactions, conversions from Bitcoin into your local currency, what good is the damn thing to you?
Yeah, that's a good point. You mentioned the word inflation, so I just want to touch on that a bit. On one hand, we have inflation created from all the crazy money printing going on, and let's face it, goods and services, they're really not going to get any cheaper. And on the other hand, we have banks suppressing the prices of gold and silver. Do you expect gold and silver prices to continue to head higher over time simply due to inflation? I mean, you cannot have the prices of everything go up except for gold and silver.
Well, the great advantage of governments and central banks against gold and silver is the ignorance of investors. Investors buy paper gold, they buy paper silver. They think that the gold and silver supplies are finite. Excuse me, they're wrong. You know, the line about gold is you can't print gold, but they print gold every day. They print paper gold, and people accept it. And unless you are confident that you own metal that is in a vault that's independent of the financial markets, that you can get your hands on if you need to, you probably don't own it. As long as investors are buying gold derivatives, and not just futures, but shares in exchange traded funds that don't let you convert the shares into metal, and that are probably just entirely or mostly paper in the first place, then yes, this can go on forever. It can go on forever until real delivery is demanded of the metal. I have some hope that the day is coming when that will happen. I mean, there's a fair amount of speculation that central banks themselves will once again, as they've done before, used revaluation of gold and silver to devalue their own currencies and devalue debts and reset the whole world financial system. That's been done before. It was done by the United States in 1934. The government took the gold and then revalued it and devalued the dollar. There was a academic paper written by the Scottish economist Peter Miller, I think back in 2007, which is posted at GATA's internet site, which explains how central banks need to use the metals to devalue their currencies every so often to keep a fiat currency system going. That because the nature of a fiat currency system is interest upon interest upon interest, building up an unpayable debt that has to be devalued. Miller thought, I think when he wrote this back in 2006, that central banks would be able to avert a catastrophic worldwide debt deflation only by a devaluation that upwardly revalued gold by 6 or 7 times. And that was back in 2006. In any case, central banks, while they're usually working against the monetary metals, when they get in a difficult situation and they need to devalue, the monetary metals are a mechanism, a primary mechanism that they use to devalue their currencies. That day may be coming soon too.
And I guess since we're on price right now, we've seen the gold price break above the psychological levels of 1,000 back in 2009. And then more recently, we've seen it break above 2,000 just last year. Now, despite these record highs in gold prices, the economy seems to chug along and nothing in the financial system seem to break, or at least not yet. How high of a gold price do you think the banks absolutely do not want gold to reach? Another psychological number. Is there a number where all hell could break loose?
Well, Jim Rickards says that central banks in principle want a higher gold price for the reasons that Peter Miller identified. They want to devalue their currencies. They need inflation to devalue debt. As a gold and silver investor, I wish they were, doing more of that today. They're not. They seem to have really put the metals into lockdown for the last few months. How high a price? I don't know. Jim Rickards wrote an essay this week repeating something he has often said, that if central banks want to trigger inflation and help devalue the debt, the Federal Reserve could do it in 15 minutes, and the figure that Jim picked was $5,000. The Fed could vote that it would be a buyer of gold at $4,950 and a seller of gold at $5,050 and simply start buying and selling gold, starting with the stash the U.S. government purports to have at Fort Knox and at West Point, and simply devalue the currencies that way and generate velocity of money, generate inflation, and just pick a $5,000 gold price. I mean, other people have picked $10,000 as a price that gold should be at if it was reflecting inflation of the last few decades. I mean, I don't like to play this game. I mean, I'm not smart enough to play it. I just point out that governments have upwardly revalued gold in the past. They treat gold as a mechanism of devaluing their currencies when necessary. They treat it as a mechanism of devaluing debt. They could do it again. Some people who are much smarter than I and more tuned than I to what's going on right now think that that is going to happen. I think it's certainly plausible. I mean, it's happened before.
Chris, why have regulators still today, why are they still unable to prosecute these banks with serious charges for manipulating precious metals markets?
Well, in the United States, the government has prosecuted a few traders at lower levels. And even though these traders have said that they were spoofing the gold market, manipulating the gold and silver markets and the treasury bonds markets with the knowledge of high officials at the bank, those high officials have not been prosecuted yet. They just prosecuted some of the lower level people. Some of the banks have consented to paying big fines. A few months ago, J.P. Morgan Chase agreed to pay $920 million for rigging the gold, silver, and treasury markets. Deutsche Bank a few weeks ago paid a $125 million fine for bribing government officials and for rigging metals markets. Of course, you know, these fines seem like mere slaps on the wrist for the banks because they're dealing with so much money. But you know, I imagine that since these big banks, Morgan and the others, are agents of governments and central banks in the financial markets, these big banks surely know how the government is involved in rigging the markets. And I suspect that the government is making a deal with these banks saying, okay, look, you know, you've done a lot of work for us, but you also did some bad things on your own account. We got to do something about this. How about if we go after the little people and we, you know, make you pay some fines, and we won't go after the top people, and you don't squeal on us either. I mean, that's what the deal looks like to me.
Yeah, you just can't put that past them.
You
Um,
know, I think surely the people at Morgan have just as much on the U.S. government as the U.S. government has on Morgan.
yeah, completely agree there. But, you know, mainstream media, how big is the role of mainstream media organizations in helping to expose the rigging in the precious metals market?
Central banks have enormous power. They have the power to create and deploy infinite money. But in recent years, I've come to think that that is not their greatest power. You know, great as that power is, it's not their greatest power. Their greatest power is their control over the mainstream financial news organizations, or the cowardice of the mainstream financial news organizations. If the mainstream financial news organizations could put even one critical question to any central bank anywhere in the world, it might send the financial system quaking. But they don't do it. I think they don't do it for a few reasons. One is government pressure. Look, you know, central banks are great news sources. If a mainstream financial news organization ever put a critical question to a central bank, well, you're not going to get invited to the Fed's Christmas party anymore. You might not even get the press releases anymore. I mean, that's one thing. Working against the news organizations doing some actual journalism here. Another thing is, I mean, who are the major advertisers for mainstream financial journalism. They're all the big investment banks, which are in turn agents of the central banks. They're primary dealers in U.S. government treasury securities. I mean, I tease our chairman, Bill Murphy, who's always raging about the failure of the financial press to cover this story. And I point out to him, I mean, Bill, read the Wall Street Journal every day. Page 3 has an ad from J.P. Morgan Chase, and page 5 has an ad from Goldman Sachs. Then page 7 has an ad from Morgan Stanley. Page 9 has an ad for Deutsche Bank. And you think they're going to put GATA on the cover of the B section?
Yeah, I hear you. Well, I tell you what, Chris, they don't invite us to their Christmas parties anyway, so we got nothing to lose. We may as well help pull the cover back here. But
well, I haven't been out of the house in a year and a half. I want to go anywhere. Have a party, invite me. Get Singapore Airlines to work again.
Yeah, we're waiting for that day also. But Chris, if mainstream media is powerless and the regulators are powerless and the mining companies are powerless against the actions of the banks, how can the manipulation in the gold and silver market be defeated?
Well, we're doing it today. There's alternative media now. I mean, if not for the internet, Pat, GATA would have gotten nowhere in 20 years. I mean, if we would have had to put regular postage on our newsletter and mail them out to people. One mailing would have bankrupted us. But the internet is free. The internet is very liberating. It has its own problems. It lets people put out falsehoods all over the world, but it also is very democratizing. I think because of our work and because of the help that we have gotten from enterprises like yours in calling attention to this issue, we have been able to alert many people around the world to what is going on, certainly beginning with monetary metals investors. And it starts there. We've been able to go to some financial conferences around the world and give presentations and distribute our presentations over the internet. Well, there's alternative methods now. I mean, if the Financial Times and the Wall Street Journal and Reuters and Bloomberg were controlling everything, well, we wouldn't get anywhere. But I think there is general understanding now in the gold and silver sectors that governments are tampering with the markets. The markets are not free. And I think most people who are seriously involved with gold and silver know what's going on here. We just have to expand our reach. Now, next week, I will be speaking at an internet conference that's aimed at West Africa, originating in Lagos, Nigeria. That's it's a big gold producing region. It's a region that now produces more gold than South Africa itself does. We have not really made any outreach there. I'm hoping that we will reach at this conference some government officials and mining company people and spread the word some more. I will be urging the Africans to nag their own governments to clamor about this. For example, I looked up the other day preparing my presentation. The West African nations that are supposed to be at this conference, and nearly all of them are members of the International Monetary Fund. But I doubt that any of them know that the International Monetary Fund exists mainly to help the United States government keep the gold price down, that the IMF from time to time sells gold in the name of helping the poor countries, but they are knocking down the price of the primary export of the poor countries that they're purporting to help. Now, do the West African countries that are members of the IMF know this? I doubt it. I want to invite them to consider whether the loans, the dollar loans that they get from the IMF are worth the destruction of their own primary exports.
Okay. So are you at this conference, are you expecting that are you hoping that these gold producing nations sort of band together to exert pressure on the banks to get them a better deal for their gold?
Well, I'm inviting them. to call in their local United States ambassador and ask him to ask exactly what is the U.S. government's policy on gold, and what are the U.S. government's transactions with the Bank for International Settlements in the gold market. They could visit the BIS in Basel, Switzerland. Presumably, some of these countries have ambassadors in Switzerland, and they could confront the BIS. What are you doing with our, with our primary resource here? Our consultant about the Bank for International Settlements, Bob Lamborn, reports every month about the footnotes and the statement of account of the BIS showing the changes in the BIS's gold and gold swap positions. And he has determined that the BIS has been very active in the gold market in recent months. In fact, the gold swaps in which the BIS is engaged now exceed 500 tons. I think his last report the other day said 523 tons, which is just about 20 tons lower than the record involvement of the BIS of like a month or two ago. So, here's a Western organization, the BIS, which, like the IMF, is very much involved in suppressing the gold price. Well, gold producing nations should be clamoring to the BIS and clamoring to the IMF to account for what they're doing in gold. The governments of West Africa should be doing it, and they should be prodded into doing it by their gold mining companies and the company's employees, and really any patriot in West Africa should be clamoring about this too. I mean, I am telling the West Africans that, look, you are free right now only nominally, but if you are going to use the currency of the big imperial power, the United States, and you are going to be forced to trade in that currency, and if that currency is being supported by outside forces while yours is being suppressed by the suppression of the price of your primary export, you're still a colonial slave to that power. The West Africans got to understand that, and I doubt they do. Now, I'm, hardly, the world's leading expert on gold, but if I can prod them to start looking into this issue and asking the questions and holding the perpetrators to account, maybe we'll start something.
Chris, would people buying physical bullion to the point of shortage break this rigging in the gold and silver markets?
Well, the London Gold Pool, which is a previous edition of gold price suppression policy in the West, collapsed in March 1968 precisely because of offtake in the gold market. People realized the dollar was overvalued. It was being inflated by Vietnam War and anti-poverty expenses in the United States, and they started buying gold. And the Western nations that were dishoarding their gold through the London Gold Pool, including the United States and the UK and I guess 7 US allies in Europe, began to run down the reserves and decided they didn't want to lose any more. The US gold reserve was run down during the period of the gold pool, I think from about 25,000 tons to the 8,100 tons today. And at some point in March 1968, the United States realized that this rate of dishoarding to keep the gold price at $35 an ounce, it would run out of gold in a few more months. So they closed the gold pool. The gold price was released for a while, and they came up with a different mechanism of suppressing the price. So yes, physical offtake can help break the manipulation. But you just got to be very careful about that. If you buy your gold and you take a certificate, say from Credit Suisse, that they're holding 100 ounces of gold for you. No, that's still in the banking system, and it's probably those same 100 ounces of probably being sold 100 times each to people taking paper certificates. You can't beat them that way. You got to, if you're going to buy the real metal, you got to make sure that it's out of the banking system. And there's some ways you can do that without taking your possession yourself. You can buy gold through vaulting services like Gold Money or Bullion Vault or other ones like that. I mean, your operation has a fantastic vault in Singapore. I've been in that vault. I was awed by it. very secure, and everything's labeled. You know exactly where everything is. I mean, if uh, if you want to own gold, and silver, that's a great way of taking it out of the banking system and making sure it's secure. That's how you can help. But if you want to buy a certificate with Morgan Stanley or Morgan Chase or Deutsche Bank saying that, hey, we'll hold your gold for you. I got a bridge in Brooklyn I'd like to sell you.
Okay. And how about companies, let's say companies like Tesla, where let's say they choose to hold gold as reserve assets, and would something like this accelerate the end to the rigging game as well?
Once again, it depends on how they're holding the metal. I mean, Tesla is a remarkable operation. It's never made any money, but its owner is the richest man in the world practically, on the basis of the value of his stock. I mean, I don't know how Tesla is really too much different from GameStop. Um, I mean, maybe it will be someday. I mean, I wish I held a lot of Tesla stock, but it depends on how Tesla is holding the gold. If they buy it, if they're buying SLV, not so much. If they're buying it and they're storing it your vault in Singapore, well, then I'd be very happy about that.
Okay. Last question about hanging on to physical. Is it 100% certain that if everybody on the exchanges like COMEX demanded physical delivery of their contracts, there just simply would not be enough precious metals to fulfill the demand?
Well, of course, look, Jeff Christian, who hates GATA, he runs a gold consultancy. He testified to the CFTC 10 years ago that gold is traded in London at a leverage of almost 100 to 1. That is, that there's, every ounce is traded 100 times every day. The Reserve Bank of India, a little after that, issued a report calculating that the leverage in the gold market was 92 to 1. So, there's a lot of evidence that, perhaps 90% of the gold that the investment world thinks it owns doesn't exist. What would happen on that glorious day when the Archangel Gabriel came down and told everybody demand delivery, and people found out that 90% of their metal wasn't there? Well, the price on the remaining metal would probably go up a little bit, don't you think?
Chris Paul, before we wrap up, can you let our listeners know more about GATA and how they can support GATA's work?
Oh, thank you, Pat. Yes, GATA is a nonprofit educational and civil rights organization. We're incorporated in Delaware in the United States. We're recognized by the U.S. Internal Revenue Service as a tax-exempt 501c3 organization, which means that in the United States anyway, financial contributions to GATA are federally tax exempt. Our internet site is gata.org. We run a usually daily newsletter that we distribute for free. People can go to our internet site and get themselves on our mailing list. We try to alert people to uh, events of general interest in the gold and silver and financial markets. We concentrate, of course, on gold and silver. We archive the major documents of government intervention in the gold and silver markets, gold price suppression. I think that's probably our greatest value in the long term, is that we have archived these documents in the documentation file, and we from time to time we put out a summary of these documents, make them easy for people to find, so that people cannot say that complaints of gold price suppression are conspiracy theory. No, gold price suppression is longstanding Western government policy that is documented heavily in government archives and by central bank official statements. That may be our greatest value. People can go to our documentation file and find that. But we very much would like more subscribers to our newsletter. And of course, if people would like to help us financially, they can do that via a link on our internet site.
Okay, Chris Powell, we appreciate the work that you do over at GATA along with Bill Murphy, and hope we can do this again soon.
Thank you very much, Pat. I appreciate your work too. So thank you again.
That was Chris Powell of the Gold Antitrust Action Committee. To find out more about his work, please visit gata.org. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.